Good morning, traders, and a happy Tuesday out there to everyone there. Such a nice evening, and as we know, we'll have our CPI figure due out today at 8:30 Eastern, and then outside of that, we know it's also pre-FOMC. We have our 30-year bond auction out later in the day as well at 1 o'clock Eastern, so should be interesting on that front as well. But for our purposes here today, we have 8:30 CPI for the U.S. and then 1 o'clock we'll have our 30-year bond auction there. So just hopping on a few moments early here so we can cover our bases ahead of time there. So we have plenty of time to let things settle in before we have our morning economic data point. So for starters here, we could begin by pulling up our daily charts on the S&Ps, which we know had fairly good rhythm yesterday. Our third day of low to high trading, we did a decent job of closing above the 46.66, which had been the previous day's high at the time, the high from Friday's trading. So not too bad on the progress. And even in the Globex session here, we've been putting in a Globex high of 46.85 half. So certainly not much to fault. The other item, as we know, is that we're coming outside of this previous range that we had built out for a prolonged period. So nice to see us, maintaining and holding ourselves outside of the range. So as we come up here, of course, looking back as to our previous data points in this region, wasn't quite front month at the time, so our data points are a little bit more blotchy there in the past. However, what we do have is a bit of a round number up above, 4,700 would be a zone of interest up above as far as the ES goes. And then really, as far as since we do have a morning data point in case we have any type of adverse reaction, our previous day's high 46.79 half would also be worth keeping on the sheets there as far as our ES goes. So we'll have that going for us. And then just to bring this out in brief, nothing to get too overwhelmed with, but if we jump back out to our cash here, the SPX, we can note that we're also this is more on the weekly data, and it's the cash market, so it's not quite the same as our futures. However, a little bit more normalized, so we could see as well we're coming up to a previous visible spike high that we had basis the cash market. So if looking for additional data points, it does give a little bit more of a smooth feel being out there on the cash. But with that said, daily charts are also fine. 4,700 up above, 46.7950 down below as far as our ES goes. On our intraday data here, such as our 120-minute display, not really many signs of major loss of momentum. We can see our waves on our oscillator, three nice humps here, but still maintaining ourselves, good impulse. We kind of regrouped yesterday, essentially forming a continuation pattern. So moving outside of our prolonged basing action and doing a fairly okay job for now of maintaining it. So once again, that 46.7950 though is that previous day's high that would be worth keeping tabs on there. But for now, I'm having no issue leaving that behind and continuing their march up. So as far as the ES goes, continuing on there, we have some mild data points to still be aware of further up. But moving on along here, that's where we stand with our ES. We'll see how we come out with our morning data. Over with the DAX still on the extended run to the upside here. We did have some pausing action overnight, but not quite enough for them to trade down to the 5 SMA. That's going to come in at 16,757 in the case of the DAX. So they lined up a little initially overnight, but another market where, of course, being on the extended run to the upside, not a whole lot to fault there on behalf of the DAX. Just looking at the more intraday data, whether you're looking at a 30-minute or 15-minute piece of data, viewing our zone down below, a little bit of a caution zone. We're on the extended run, so in case we have some, downside action, 16,747 there in the DAX would be a little bit of a caution zone. But as we can see for now, they're doing a fairly okay job of maintaining. They're even trying to put in a bit of a higher low here on the 30-minute data, so trying to maintain this bit of channeling action or good persistency of trend that we've been having to the upside as far as the DAX goes. So still on the extended run. Obviously, a better bid underneath or better persistency of trend than that of our ES, but still we'll keep an eye on it. You can also see how it resolves from its data point as well, the morning data point. But moving outside of our index future group, we have our currencies to look at here as well. And here with this euro currency, we'll be rolling there shortly. But we know we had our inside range bar yesterday, so a little bit of the 3-bar balance mode coming into the session here today. Already in the overnight session, they've been fairly active, so they've been trading low to high. We do have the daily EMA up above 1.08260, so EC is kind of getting a bit of an early start going there as far as its progress. But taking our 120 minute display here, blowing it up a notch. We know we had to, do a prolonged time on filling in some of the impulse bar that we had to the upside in the euro currency. So, pretty much, filled in a good portion of all that work that we had done. Coming up now in the EC, we have visible spike high or cycle high at 1.08215, which would be a nice hurdle there for the EC, or at least a point of interest for us. So we can latch onto that, see if they respond to that zone at all. And then on the flip side, in case we, totally fail, 1.07270 would be a bit more of a caution zone. But for now, marching up, they had the inside range bar, so working on some early range expansion. But we'll see just as in if they can get above the 1.08215 hurdle there as far as the euro currency goes. But nice visual there for it, and making some progress on the dailies. And then speaking of 120-minute data, we have the gold next in order, and we had the GC having some of this action unfold overnight in the Globex session. In other words, if I pull this one over here, we had nice visual as far as the I have it right here, the loss of momentum or buy divergence that we kind of had unfolding in the gold going into our close yesterday. 2 good strong days of high to low trading out of the balancing act, so we had good pressure. The only issue is that we've already had the reversion to the mean unfold overnight. Looking at the 120 minute, this is your buy divergence, right? Your lower low in the price and higher low in the oscillator. So reverting back, we've already made it to the 120 minute moving average. So of course the cycle low that we had down there, 1987, would be a little bit greater cause for concern. And since we've already made it to the 120-minute EMA, we've already had our kind of pause bar of green, so it may very well have been that they've tried to lifting up first, and then they can perhaps do some resuming on their testing back to the downside there. But what would change this line of thinking? You can see here we have the 2021 pretty close to being in line with the daily 5 SMA there at 2022. So for now, just sitting here at the 120-minute moving average, but they did do some counter-reactive lift overnight after having some good damage that was done. So not sure we're quite out of the woods there as far as the GC goes. So like this 120-minute view here, just kind of blowing that up a notch. We got our caution area down below, and then points of interest in case we lift up any further from our morning session there. So that's the GC. And then we have the crude and the bonds here before getting into our CPI figure. The crude, for one, very interesting, the progress it had been making, right? We had our consecutive red bars down. We put in 3 green bars back up, did some testing here above the 5 SMA. Not quite enough for these for the crude here to get back above that 72.37, at least for now. Who knows if they want to come back above that at some stage there. We have the crude number tomorrow, but for now, for our purposes here today, we did keep it a notch beneath that point. So here with the crude, to kind of further that feeling, if we blow up the 120 minute, you can just see some of the selling pressure that we had from our initial wave to the downside. So we came up in a bit of a 2-part wave, kind of like this feeling of like the A, B, C type of wave with a slightly higher high, filling in some of the heavier selling pressure that we had there from our trading last week. So we're kind of coming close to it early on here. The 70.35 here with this crude is going to be a point of interest for us there. The tail or low there from yesterday's trading. So back on the other side of the 5 SMA and trading inside of that tail from yesterday's action there in the case of the crude. And last but not least here, and that'll give us plenty of time to kind of settle in and get our charts back in order before our CPI, is that of the bonds. So here with our 30s, blow this out just a notch here. We had our 3 days, high to low, right? Interestingly, overnight. Remember how long it took us to get on the other side of that Friday low, so it was short-lived on the test, but we did get it out of the way. And just to kind of point it out, it's not exactly the same as the gold, but the oscillator configuration we could certainly say has been similar. So working off some of this buy divergence or loss of momentum on both the bonds and the gold already overnight. So I don't want to get too far ahead of ourselves because we've already lifted up quite a ways here. So in the bonds, we're testing back above 5 SMA here on the daily charts, back inside of the the range from last week, if you would. And looking back at 120-minute display, right, we came down, put in our lower low, already boosted up and reverted to the mean. However, any type of full retest up is quite a stretch up there. That's 120.25. So what we'd want to be on guard for in case they were to, come up any further or just stall out right here. If we end up putting in any type of lower high on this 120-minute data, that would be pretty quick to catch our attention because we've had one lower high and then we've come down, put in our lower low and then came back up. So if we were to put in a second lower high, that would not be too constructive there in the case of those bonds. And then just for kicks here, we could take a quick peek at the notes. The 10s, I would say they're very similar in their nature. Same idea with the 120-minute display, little buy divergence. However, with the 10s, you could say we're filling in a couple more of the blanks, but essentially a very similar concept there to the bonds. We have one little lower high, so as we come back up, this testing phase today should be fairly crucial there for the fixed income markets. So with that said, I'm gonna dial it back here. We'll blow up these S&Ps nice and big here for us. We got over 5 minutes here till we get into our morning data points, so plenty of time to kind of get things settled in, charts adjusted and such, and then yeah, we'll see what we have lining up here for this morning session in front of us. As far as the ES goes, just once again, as we know, we've closed outside of the previous ranges. We just rolled to the March series, so our data points from the past are a little skinny, but still making good progress. And this is our fourth day, if you would, of low to high there on these S&Ps. And we'll just take out one last peek here at our cash market, the cash S&P on the weekly basis, just to kind of get us out on a little bit bigger of a time frame. For one, very impressive over the one time framing mode on these weekly bars, but we do have some spike highs and such to kind of be aware of here. So that's on the SPX, but you could go around. I mean, if you want to explore it as well, you could see on the continuation pattern, if we're looking at that same data point, this little spike high that we had, quite a lot further away from it on the continuous basis there than the cash. So just to kind of take into account. So that's that. We're gonna squish that back down, and yeah, we'll let this all settle in ahead of time, and then see how we respond to our morning data point. And as always, I don't want to be overly reactive from it. Want to always let it settle in, see how the market responds to the data there, not to get too overreactive or chasing there. So should be rather exciting this morning, and that'll be due out in just about 4 minutes here.